Major move. Inflation is worse than it has been in decades, so the Federal Reserve is taking action we haven't seen in decades. The Fed has boosted the nation's key interest rates by 3/4 of a point.
Reporter Yvette Franco from our DC Bureau is in Washington this morning with what that means for borrowers and investors.
Americans may not be smiling after the Federal Reserve announced an interest rate increase of 0.75% to fight inflation. This is the biggest increase in the last 30 years.
Taking aggressive action to tackle the fastest inflation in 4 decades.
Today, the Federal Open Market Committee raised its policy interest rate by 3/4 of a percentage point and anticipates that ongoing increases in that rate will be appropriate.
These rate hikes will impact millions of American households and investors, pushing up the cost of borrowing for homes, cars, and other loans to try to force a slowdown in the economy.
For people who are first-time home buyers looking to get that mortgage right now, that's going to become much more difficult than it would have a few months ago. People who are in the market to purchase a car are going to have higher borrowing rates today than they did 3 months ago.
Other analysts are hoping for an economic sweet spot.
But I think the Fed has a decent chance, a reasonable chance of achieving what Jay Powell calls a softish landing, either no recession or a very mild recession to bring inflation down.
Even though the Federal Reserve has increased rates multiple times this year, financial experts say we should be prepared for even higher rates in the next few months. From Washington, D.C., reporting for the South Florida Media Network, Yvette Franco.